Hey now, I'm back with another exclusive trading system that not only provided a ton of signals in a short amount of time, but also produced a huge gain on account over a series of 100 consecutive trades. Be sure to stick around until the end where I show you how to make this strategy even better. And if you want to see more content like this, then crush that subscribe button before this happens to your account. I call this system Trend Shot, and like most trading systems, it can be adapted to Forex, crypto, options, stocks, indices, or any instrument that has significant volume and market participants. This trading strategy utilizes 4 free TradingView indicators. As always, links and settings to all indicators are listed in the description. The first indicator is the Exponential Moving Average, or EMA. The length will be set to 200 and colored in white. The 200 EMA will be used to determine overall trend direction. The second free TradingView indicator is another exponential moving average. This EMA will be set to 50 and colored in white. The 50 EMA will work with the 200 EMA to determine the trade direction. The third study to place on the chart are the ATR bands. I am going to set the ATR multiplier for both upper and lower bands at 2 and color it in pink so we can see it clearly. This indicator places bands around price so we can quickly see the specified ATR value around the corresponding candle. In this trading system, the ATR bands will be used to set the stop loss levels. The final indicator is the trend meter. Inputs will be kept at default, and I am going to uncheck signals 1. The trend meter is made up of several different indicators and displays as lines and dots on an indicator plane. The trend meter will be used to confirm entry signals. Let's go over entry criteria and review some examples. As always, system rules and details are listed in the description below. This chart is Bitcoin versus the US dollar 15-minute Japanese candlesticks. The rules to enter along on the trend shot are: first, the 50 EMA in orange must be above the 200 EMA in white. Second, the 4 dots and 2 lines on the trend meter must be green. Our rules are met when this candle closes. That is our trigger candle. The stop is placed at the ATR band below the trigger candle, and the target is 2 times risk. And after a while, the first long example hits the target on a very bullish candle. If you enjoy this content, make sure to click that like button. I have one more long example. The 50 EMA is over the 200 EMA. The trend meter is showing all green. Everything converges on this candle, and it serves as our trigger. The stop is placed at 2 times the ATR value of the trigger candle, and 1 to 2 is our target. And this example quickly hits the target. Now we flip to shorts. This is what I would test for shorts. First, we can see the 50 exponential moving average in orange is below the 200 EMA in white. The second rule requires the trend meter to show 4 red dots and 2 red lines on the same candle, and remember to always wait for the candle to close. All of that happens on this candle here. That is our trigger candle. The stop is placed at the ATR band above the trigger candle and target 2 times risk. Short example 1 hits the target. I'm going to show you one more quick example. The 50 EMA is below the 200 EMA. The trend meter now shows all red. This is our trigger candle. The stop is placed at 2 times the ATR value of the trigger candle, and the target is 1 to 2. And the final example hits the target. I'm going to give you some insight on how we can improve this system along with a trader's landing score. And now it's time to do what I do. If you enjoy this content, hit the like button. Remember, this is just 100 tests on one instrument. If you are thinking of using this system, please do extensive back and forward testing, and be sure to let our community know what you discover. This test was done on Bitcoin versus the US dollar 15-minute candlesticks. It took just over 1 month to find the 100 setups. Just a note on that, I took every signal if there was an open trade or not. This dataset produced a 57% win rate consisting of 8 consecutive winners and 7 consecutive losers, with a maximum drawdown of 11.5%. And I am going to give you some tips on how to greatly reduce those consecutive false signals. This test produced a very nice 2.63 profit factor, and risking 2% per position, the total gain on account was 140%. The equity curve here is characterized by some upward choppy movement followed by a very impulsive trend. Taking the trades from the 15-minute dataset and placing them on the 4-hour chart, we can see there were areas of nice directional movement in addition to some consolidating conditions, confirming the effectiveness of this system during trending markets. I give this system a Trader's Lightning score of 8 because this system provides a great base to further optimize, has simple and repeatable rules to follow, and gets you into trending markets. Remember, the enemy of great is good. I have 6 ideas on how we can improve this system. First, like I have pointed out before, using volume to confirm signals can be very helpful. Here we can see the volume pressure analysis indicator that confirms 3 valid signals and filters out a losing position. Second, sometimes people rely too much on indicators. Here we can see that the 200 EMA is clearly supporting the 50 EMA. This, in and by itself, indicates an uptrend. However, we can see that this chart is heavily consolidating. This is not an area to use a trend following system. Furthermore, in trend following systems, you should consider some additional items such as market structure on the higher time frames, obvious areas of support and resistance, in addition to key areas of psychological interest like round numbers on the chart. Next, there were many times during the test that price hit the 1-to-1 level only later to stop out. Retesting this by either taking partial profit at 1 times risk or moving the entire position to break even is sure to increase the win rate. Fifth, you can use an oscillator like the standard RSI to spot divergences. Here we can see clear bearish divergence, a higher high on price and a lower high on the RSI. This would not be the best place to go long and does filter out false signals. Furthermore, when you see a tightly trading market structure with a series of lower lows and lower highs, but the EMAs you are using are not letting you get into the trade, look to change your trend confirmation indicator to match the market structure. Here you can see the 200 double EMA in green, which gets you into multiple positions before the 50 crosses below the 200 EMA. If you want to talk to me and interact with our community, in addition to supporting the work I am doing here, you can do so for free by registering for our Circle community. And those who pick up a preferred or elite membership will have access to the discussion and education spaces in addition to the TradingView automated scripts. Thanks for watching and have a great day, because you deserve it.